Hi there guys, my name is Andrew Baxter and thank you for joining me for this live training broadcast called Create Your Own Income. Now, when we look at life, one of the big drivers we all have is the ability to be able to generate more income. Cash flow really is like oxygen. Without it, we're dead. And unfortunately, the model that so many of us are conditioned to is exchanging our time for dollars through a job or something else that requires our focus. Now, clearly there are only 24 hours in the day, which limits the amount of income that you are able to generate. Maybe you try and get a higher paying job, more stress, more time after hours, and probably less time with your family. So the cure that most people seek out to fix that problem is in the world of investing. And perhaps you've tried this previously. Maybe you've been involved with property, maybe you've been involved with the stock market. And by the way, I think it's important to do both. It's not a question of one or the other. And when it comes to getting involved with the stock market, many people consider it to be a gamble. In fact, if you look at the statistics, 80 to 90% of investors in the stock market lose money. And there is a very, very simple reason why they do that, and that is because they are speculating. They are using a very, very ineffective business plan. And it should be noted, by the way, that money is never really lost in the stock market. It's just given to another group of people. And the whole premise for their investment strategy, those that are continually losing money, is that they need to guess the direction the market's moving in. Now, if you think about it, markets can do three things. They can move up, they can move down, or indeed, they can move sideways. And if you again look at this statistically, there's about a 1 in 3 chance of any one of those outcomes happening. So you're not even playing black or red, heads or tails, 50-50. There's a 1 in 3 chance you're going to make money if your entire strategy relies on you guessing the direction. Now, instead, and it's always good to refer to something as a touch point, I want to introduce you to a quote from a very, very famous and extraordinarily wealthy individual, and that individual is Warren Buffett. And to quote Warren Buffett, the stock market is a device for transferring money from the impatient to the patient. So what we're going to do in this training session is very much look at a strategy that is totally designed to target the impatient money in the market and transfer that across to the more patient person using the right kind of strategy. And effectively what we're looking to do is to be paid an immediate and upfront income directly into our bank account, whether the market moves up or whether it moves sideways. In fact, the strategy I'm going to share with you today will also enable you to make money if the market drops a little bit. So instead of working with an odds of 1 in 3 of being successful, by adopting this strategy that I'm going to teach you in this session, you're going to improve your odds of success dramatically because you will make money here, you will make money here, and you'll also make money in this instance here. Effectively, instead of a 1 in 3 chance of making a profit, your odds are going to be closer to, say, 65 to 70% chance of being right and therefore making a profit. Now that is a significant improvement, and it's a strategy, as I said, that's focused very, very much on helping target that impatient money and putting it in your bank account right now. Now, what I'd also ask you to do is please do stick around to the end of this broadcast. And there's a reason why. I have an extremely powerful gift I would like to share with you, and I'll be revealing what that is at the end of this broadcast. So please do stick around for the duration of this. We won't run for hours. I will get to the point with this strategy and have you up and running with what you need to do next over the next 30 or so minutes. I'd also invite you to take notes too, because you'll retain a lot more of the information I'm going to share with you. And hey, once you start to bed this kind of strategy down, those notes will be worth a lot of money to you. So let me share with you a little of my background. I've been a professional trader now for just over 22 years. I graduated with an honours degree in business and finance, and if you don't have an academic background, that's actually pretty good, because often it's said that money only flows to those people that are teachable, and perhaps when you have a lot of formal education and more letters after your name, you tend to be more close to learning new things. So if you've not got that background, that's a big advantage in my book. I own and run my own hedge fund. I also own and run a broking business. I've had the opportunity to speak alongside some of the world's biggest luminaries, if you will, in adult education, people like Tony Robbins, Sir Richard Branson, Robert Kiyosaki, to name a few of the people I've had the privilege of working alongside. And in doing that, I've had the opportunity to empower over 45,000 individuals, people just like yourself, on how they can enjoy a better financial future by stacking the odds very much more in their favor. Moving away from playing black and red to just having consistency of regular income, what we call creating our own income and creating it on demand. Now, as an organization and personally, my mission is to reach out and be able to empower over 100,000 people to have control of a better financial future by learning this sort of skill and the risk management and some of the finessing that we're going to look at with our time together today. Now, the important thing here is what I'm going to talk about isn't theory from a book. Because I am a professional trader and because I do run a hedge fund, what I'm going to share with you is stuff that we use in the market real time, live, with real money. It works. It just works. So please do take note and start applying this strategy. Now, the biggest breakthrough I had when it came to making money wasn't through my experience as a professional trader. It actually started when I was a kid. I bought some shares. I did a shares project at school, which some of you may have done too. And I had some savings. I had a part-time job after school on weekends and put my money into those shares. And unfortunately, it didn't quite work out. And I sought some advice from my dad. My father said, look, save your money for a rainy day, put your money in the bank. But I was serious about really trying to get to grips with this. And I was reading a book at the time called Rich Dad, Poor Dad, written by Robert Kiyosaki. Great book if you haven't read it. And I decided to give it another go. And sure, I was nervous and sure I was scared because I'd lost money that I'd worked so hard for. And this time with the right schooling, the right strategy, I was able to get a very different outcome. In fact, I turned my $500 investment into nearly $5,500, and I've been hooked ever since on trading and investing. But the important message here is very simple. That was the first time in my life I'd ever seen money work for me instead of working and exchanging time for dollars. An enormous breakthrough, a big change in my financial DNA. And that's exactly what we do with our clients. We teach them how they can have their money working for them instead of them having to work for it. So I guess my question to you is a simple one. Are you interested in having more cash flow, or are you committed? Now, one of the things I need to share with you is the fact that I'm obviously licensed and qualified to be talking to you today. And two things I need to point out by law. Firstly, trading and investing does involve risk. And secondly, past performance is no guarantee of future performance. What I'd also say in terms of risk is the biggest risk of all in life is doing nothing and hoping that something changes. You need to take action if you want a different outcome. And as we go through our time together in this training session and beyond, you'll see that risk management in particular, that protection of our assets, is something that runs through our very DNA. So bear that in mind as we go on through. It's important to take action but manage risk on the way through too. So let's start by looking at the cost of living. And if we consider living in Australia, we are in one of the most expensive countries in the world. I saw some research just recently, and it's hard to believe that a cup of coffee in 20 years' time is going to be around about $23 with the way that prices just keep moving up. And if your investment strategies or your super hasn't really kept up with that, and your investment returns have left you behind, not only are you going to be worse off financially, but you're also going to be significantly worse off in terms of the quality of life. Because, hey, we live in the latte society. Going out for a coffee now is a non-decision. It's a $4 or $4.50 decision. But if you haven't invested well, and in 20 years' time, taking your loved one out for a coffee is a $50 decision, it's going to be a painful one. So my urge to you is learn how to do this, have your investments working for you, and make sure that you not only preserve the quality of life you have, but grow it to a level that really makes you feel fulfilled. And when we look at that, part of the model that most people invest with, other than trying to guess the direction of being a speculator, and hey, these guys are going to make you very, very wealthy as you learn more about how this strategy works. Because money's not lost, it's a transfer of ownership. And if this group is speculating, they will transfer that ownership of money to you and people like our clients that are using this strategy. But the first thing that we need to address is what else can we do with our money? Now, growing up, my parents' advice to me was to keep my money in the bank, and perhaps your parents said the same thing to you. And please don't get me wrong, it was advice that was meant from a good place. And let's face it, back then for mum and dad, it worked because interest rates were far higher. But these days we live in an economy where interest rates are 1% and a bit. And if you've ever heard the expression that cash is a safe investment, I would urge you so strongly to think again. Because that is such misinformation and will take you down a path that will leave you further and further behind financially. Since the GFC, I've had the opportunity to coach and work with thousands and thousands of people. And the effect of the GFC saw a lot of people hold more in cash than was healthy because they didn't know what else to do. They weren't aware of strategies like I'm going to teach you. And if you're earning, say, 1.5% or 2% on cash at the bank, which in reality is what the cash rate is here in Australia, after tax and after inflation, your actual real return on your money will be between minus 0.5 and minus 1% depending on your tax rate. In other words, by holding cash at the bank on a real basis, that's after inflation, you are guaranteed to lose money. That is a very, very dangerous position that so many people have found themselves in simply because they don't know what to do next. Now, of course, when it comes to judging an investment and an investment's potential performance, there are many, many metrics that we can use. And I'm just going to share with you a couple of things here, and it's a real common pitfall for many, many people when they look at investing. The obvious thing to consider is what's the level of return? And most people would be drawn in by a higher level of return. It's the kind of thing that very obviously would attract your focus. However, this can come at a cost because there are two things you need to be aware. Firstly, if the overall percentage return is higher, it's going to be volatility. It's going to have a lot more volatility of return. In other words, you might make 30 or 40% in a month. I'm sure we can teach you strategies to do that. But if those strategies don't work, you lose all of your money. It's kind of a bit of a disaster. And equally, the probability of those high returning strategies working, the probability of these strategies working on a regular basis is actually very low, maybe 2-3 times in 10, rather like our odds of a speculator making money. So high return seems very appealing off the bat, but in reality can be a very, very dangerous place to focus on when it comes to your investing. And instead, the entire philosophy that we've developed, and bear in mind this is over 22 years of professionally trading these markets, is that slow and steady wins the race. In fact, what we're looking to do is operate a little bit more down here. I was just reading a story to my daughter the other day, the tortoise and the hare, and obviously the tortoise wins. It's a slow and steady wins the race strategy. But what do I mean by slow and steady? Very specifically, as we look at the strategy as I'll teach it, we're looking to target returns in the order of 1.5 to about 2.5% per month. Now, it's possible to make more than that by being a little more aggressive, and we'll get to that a little further down the line. But 1.5 to 2.5% on a monthly basis is what we're looking to achieve. Now, please do bear in mind, we won't be doing that every month because conditions in the market change. But even if you're only doing this maybe 5 or 6 months of the year, you can see that this would make a considerably different return to you than maybe either holding cash or being in other forms of investment that have just disappointed you year after year. So we're not looking to set the world on fire. In fact, if you're looking for a get-rich-quick strategy, we can't help you. But if you're looking for something that will help you get rich, then please do stick with me through this presentation and I'll share with you exactly how we do that. So when it comes to return in the market, and this is the million-dollar question that so many people ask, what's available? You're a professional trader, Andrew. What's available in the market? I really get frustrated when I see a lot of numbers and statistics thrown around, so I'm going to give you two, and I'll also give you the source for these numbers too. Now, when we look at what the market has done on average, if we take, for example, the Australian market, and interestingly enough, the Australian and US market are very similar in terms of their performance over a 10-year period. If we look at the average return from the Australian market over a 10-year period, according to AMP Capital, that return is around about 9.1% per year on average. Now, obviously, there are going to be years where it's higher than that, and there are going to be years where it's lower than that. That's how an average works. But this is what the AMP Capital figures show that the ASX, the Australian top 200 companies, are capable of delivering. Now, I want to add some value to that, and you may well be very content with this kind of strategy, but it's possible to earn more and reduce your risk, and that's really what I want to focus on here. So, if we add value to this, the second part of my strategy that I want to share with you tonight, according to the ASX, the Australian Securities Exchange, the strategy I'm going to share with you through this presentation will enable you to add an additional 7.25% per year on top of what the shares have done. In other words, you're getting your shares to work a lot harder by adding this strategy onto that. Now, I'm not great at maths, and if you're not great at maths, that's great. We're kindred spirits. You don't need to be good at maths to be a trader. These two added together are 16.35%. Now, that's a pretty solid return in most people's book. And they're the kind of numbers that can be available as you embrace strategies like this. Now, our whole philosophy is helping our investors, our members, our clients, our family, if you will, be able to move from their investing being their plan B to their plan A. And one of the things you often see when you look at an investment presentation is this big discussion on compound interest. And most people are aware of what compound interest is. You put some money in, it makes a return, and then what you've made as profit is reinvested, and then you get a higher return the next year. Perhaps one of the more challenging questions is, what is the opposite of compound interest? Now, I've asked that question a lot over the years. I do a lot of public speaking and speak to a lot of groups. It's very hard to get a beat on what the answer is. And the actual answer, as we see it, is what we call this the drift. And please allow me to explain how this works. Here's our scale over here. And we're starting out on our journey. We're starting at point A, and we're quite happy moving along in life. And then something happens. We get a setback of sorts. And perhaps you've had an experience like that. I know I have too. And perhaps you've lost your job. Maybe somebody's totaled your car. Heaven forbid, a family member is sick and you need to focus on that. And all of a sudden, instead of being on line for where you wanted to be, things just slide just a little bit. Maybe you need a little bit of cash to get things back on the road or whatever it might be. And human nature, particularly when it comes to money, is that sometimes when things have moved off course, you just get into that habit of, I'll get round to fixing that up. Perhaps you've set a New Year's resolution, for example. And New Year's resolutions typically don't last that long. If you got to Easter, that's a miracle. But you drift off course. Alternatively, you might be waiting to the end of the financial year to start something, and then there's something on that stops you starting then, and it gets pushed back another month. All of a sudden, before you know it, time has started to pass by, and you've been in this rather dangerous little wave that's taken you away from where it was that you were intending to be. Now, you had all good intentions. In fact, very specifically, you were starting at point A, and you were looking, like most people, to get to point B. But because time has gone by and you just haven't got around to doing it, the Australian expression, she'll be right, mate, we've left it such a long time. The only way we can get back on course to get back up here, and look, it's possible, but the only way you can do that is to take absolutely massive risks at probably the time in your life where you really shouldn't be taking any risks. And this is what we call the drift. Now, of course, getting back on course and seeing the journey out is much, much easier to do over here than it is over here. In fact, what would you pay to stay on course over here? Over here, you pay practically anything. Price and value are very different things. But once you start to understand how this whole business of investing successfully, the way I'm going to share with you over the next few moments, maybe you might revise your goal and say, well, actually, my goal is to get to point C up here. And that journey can look very different. It doesn't have to be taking big chances. In fact, it's a lower risk way in so many instances of slow and steady eventually winning the race. And that's precisely what we're going to focus on tonight, is how to make sure that you avoid this financial drift at all costs. Because let's face it, guys, it doesn't matter how much money you have. You can never get this time back. It's about making a decision. It's about taking action, but the right action. And that's what I'm going to share with you right now. So with regards to this strategy, and over a 22-year professional trading career, there are many strategies I could share. This one offers 4 key benefits. Firstly, it's a very consistent strategy. Secondly, it's a very low time input strategy. So if you're busy, I get it, we're all busy these days. This is something that requires maybe 10 minutes a month, and it's not a big time-consuming strategy. Thirdly, it's not speculative. And fourth, it's low risk. So it ticks an awful lot of boxes for most investors out there. And as we talk about risk, let's just spend a few moments acknowledging some of the things that we do. Now, learning how to manage risk is an essential part of any successful investor's strategy. Because, and I know this sounds a little flippant, but making money is actually quite easy. Keeping a hold of it can be more challenging. So once you learn how to manage risk like a pro, your investing universe changes for the good and it changes forever. So let's take a look at a chart and run through very specifically how we manage risk. So here's our instrument and we're looking to get in right here. Now, I'm sure anyone that's invested, doesn't matter whether it's Forex or CFDs or shares, options, warrants, it doesn't matter. We get into our trade and for a few days things start to work out quite well and we think, well, hey, we called the direction right, life is good. But then things can take a bit of a setback and perhaps drift down a little bit. And if you've ever been in a situation like this, one of the questions that you're probably going to ask yourself at this point in time here is, should we just wait another day and see what happens? Let's give it a little bit longer to come good. And sure enough, the next day, things bounce up and your confidence is restored. However, it's a temporary thing because a week or so later, the share price is really caved in and you're wearing some hurt. Now, the big problem here is that throughout this experience, you've been exposed to downside risk without professional risk management. So on every trade that we place in the market, we have something in play called a stop loss. Now, a stop loss, as its name would suggest, is designed very, very specifically to help stop losses. In other words, if the share price reaches a level which you've defined before you get in, you're getting out of this at this level because if you are going to make a loss, better it be a small one than a big one. In fact, think about it, all big losses used to be small ones, we just let them get out of control. And this reflects the psychology, and in this case, this isn't about managing your account, this is about managing your ego. For some people, it's more important to be right than it is rich. They are not the same thing. So one of the tools that we use to help manage risk is a stop loss. Another tool that we use, depending on market conditions, to really give you the ability to sleep at night, that total peace of mind factor, in a way, is like, if you bought into this investment, it's like buying an insurance policy. We call this buying a put, actually, and we'll explain more about that perhaps a little later on. It's like an insurance policy, and it gives you a guaranteed level where you can exit if the trade works out the wrong way. These are the kinds of things that we do with our clients to help them add value, but more importantly, to give them that peace of mind, that sleep at night factor, which is extremely important because this is about quality of life at the end of the day. So on that note, let's take a bit of a look at how this strategy works. And if you're watching this broadcast and you currently own a portfolio of shares, so let's say you've got your own self-managed super, and if you have, that's a great thing to have. And if you haven't, well, we'd love to help teach you how you can manage it more effectively and take control. But if you own a portfolio of shares of any size, this is a strategy that you can start applying because effectively, if you own shares and you're not doing this strategy, it's a bit like owning an investment property and forgetting to put the tenant in. You're missing the rent, which is half the equation. So let's dive in now and let me share with you the unique approach that we bring to helping people just like you develop more income and more cash flow immediately and upfront from their investments. Now, as I get into this example on the board here, I just ask you to understand one thing. This training session isn't going to teach you everything and more that you need to know about trading the strategy that we use here. The time that we're spending together right now is to see how we fit together. It's kind of like a first date to see if we get on, to see if you understand the approach that we use, and then later on, we've drawn the outline, we can then start to colour in the detail as we spend more time with you. So don't get caught up on the analytics here. This is just about getting the concept across to you, and our team and I will spend a whole bunch of time with you, making sure that you know in full detail exactly how to do this. So on that note, let's take a look and see how the strategy works. And the strategy that I want to share with you first of all is something that's called buying a call option. And in its simplest form, buying a call option is rather like buying a piece of paper. Okay, and let's say you bought this piece of paper for 10 cents. So we just pause here for a moment. What we've done is bought a piece of paper, a call option, and we paid 10 cents for that bit of paper. Now this is quite a clever bit of paper because what it does, it gives us the right, not the obligation. It gives the right, but not the obligation if we want to convert from the piece of paper into actual shares in a company. So let's say this company is called XYZ. So we paid 10 cents for a bit of paper that gives us the right to buy XYZ shares at a price that we agree today. So let's assume that price is $1. And we can do this any time over the next month or so. So if we pause there just for a recap, We pay 10 cents, giving us the right, but not the obligation if we want to buy XYZ shares for $1 anytime over the next month. Now there are a few things that can happen. In the first instance, XYZ's share price could move up. In fact, let's say XYZ's share price moved up to $1.40. And because you bought this bit of paper here, it gives you the right to pay $1 for something, even though it's worth $1.40. In other words, this is giving you a 40-cent discount on the shares. Now, most people like a discount. But what's really interesting here is the impact that this has on the value of that bit of paper you bought. If this gives you a 40-cent discount, this piece of paper, the value of this piece of paper would have to be at least 40 cents. Now let's just pause here for a moment. You paid 10 cents for a bit of paper that gave you the right, not the obligation, to pay $1 for XYZ. XYZ's share price moved up, giving you a 40-cent discount if you used your bit of paper. In other words, the value of this piece of paper would have jumped. Now that is a gargantuan 400% return. And that's the sort of thing that can excite a lot of people. But the motivation for doing a trade like this would be pure greed. And that is why we never, ever do this strategy. Now, I appreciate you might be looking at this going, well, hang on, you've just shown me how to make 400% return on my money. Why wouldn't you do this? Well, the answer is very simple. In order for this strategy to work, the share price must go up. But as we talked about a little earlier in the training session, share prices don't just go up, they can do two other things. They can go sideways, or indeed they can go down. And this is a 1 in 3 chance of going up. Not great odds. Now, often if something's not a good idea, it makes more sense to do the opposite. So let's look at doing the opposite. In fact, I'll explain why. Let's just show you. If the share price fell, which it's also got a good chance it could do, let's say it fell to 60 cents, owning this bit of paper that you paid 10 cents for gives you the right to pay $1 for something that's only worth 60 cents. In other words, you'd be losing 40 cents if you were to do that. As a result, your bit of paper over here would be pretty much worthless. Not a great strategy. And as I say, if something's not a good idea, doing the opposite can make an awful lot of sense. So let's look at that now. Instead of buying a call option, what we're going to do is actually sell a call option. But this is part of a two-step strategy. Very important to understand this is part of a two-step strategy. So what we're going to do is sell a call. But step one is to buy or already own shares. So we need to own or buy shares. And in our example here, we're going to buy shares in a company called Oil Search. And let's say these shares are trading at $4, just to keep the maths nice and easy. When we buy our shares to do this cash flow strategy, there's just one technical point that I really need you to retain from this presentation. And that's the fact that we buy our shares in blocks of 100 units. In other words, to do this, you'd need to own a minimum of 100 Oil Search shares, or 200, or 300, or 1,000, or 2,000. Now, of course, looking at that, you can start to work out the sort of money that you would need to be involved in this strategy. So at the minimum, you'd need to be able to buy $4 shares and 100 of them. You'd need about $400 to do this strategy at the most minimal level. Okay? So that's step number one, is to buy our shares. Step number two is to sell our calls. Now, when we do this, the way that we teach this is very, very carefully designed to stack the odds almost unfairly in your favor of making a profit. And the reason, or the way that we do that, is very simple. If we go back to our previous example of buying a call option, remember we paid 10 cents for the right to pay $1. This dollar here is what's called, and I'm not going to use a lot of technical terms tonight, this is what's called a strike price. Okay? It's called the strike price. This is the right you have to pay this amount of money for the shares. So in our example here, we paid $4 for our shares. Now, when you sell a call option, you get paid an income, and it's an immediate and upfront income into your bank account the very next day, guaranteed. It's money that you can start to spend. But in return for the income that you receive, instead of having the right to buy the shares, you actually have an obligation to sell them. And in this instance here, I'm going to sell a $4.20 call. Why? Well, I bought my shares for $4, and this particular call option that I'm selling, if the share price moves above 420, I would have to sell my shares. Now that's not a bad thing because I paid $4 for them, so I would be making a profit if I did that. Equally, when we sell something, we also receive an income, and in our example here, let's say we received an income of 20 cents per share. Okay, that's paid immediately and upfront into your account. Now, in a nutshell, that's how the strategy works. We buy our shares in blocks of 100. We then sell a call option. In this instance here, the strike price of this call is higher than what I paid for the shares, means I will make a profit if I sell my shares, and I've been paid some income. Now, there are really only three things that can happen here. In the case of oil surge, if the share price moves up above $4.20, I would have to sell my shares. Now, that would give me a profit of 20 cents plus my 20 cents of income. In other words, I'd make 40 cents on this transaction, which is a 10% return for the month. Big return for the month. So if the share price moves up, that is good. We like that. What about if the share price stayed flat? Let's say the share price finished the month at around 405 or 410. Well, I wouldn't be obligated to sell my shares at 420 because the shares are worth less than that. Instead, I would get to keep this upfront and immediate income, giving me a 5% return for the month just for the share price staying flat. A good outcome. What about if the share price dropped a little bit? Well, let's say the share price dropped to $3.90. You paid $4 for the shares, remember. Have you made or lost money here? The actual answer is you've made money. Why? Well, while the share price has moved down to $3.90, you're 10 cents down on the shares, you're still up 20 cents on the income. So net, you're still in profit. And that was with the share price moving down a little bit. This, ladies and gentlemen, is how we stack the odds significantly in our favor when we go to the market. Now, there's a lot to take on that I've just written on that board. And as I say, this isn't about you learning to be an expert at applying this strategy. This is just getting to know a little bit about how this strategy works, because our team can walk you through this in a far easier context so that you can become an expert on this and start profiting immediately. And in terms of how we teach, everything that we do in our organization is in what we call a sequential basis, just like a phone number. If you dial the phone number in the right order, you get the person you expected. If you dial the number in a different order, take a few digits from here and there and mix them up, you're not going to get who you expected. It becomes random. So in this instance, everything in the way that we teach is done on a very sequential basis, making it easy for you to be able to learn how to do this. So, a couple of examples to have a bit of a think about. We buy our stock in blocks of 100, and I can go through lots and lots of examples, and I'll go through one more here with you to demonstrate just how powerful this cash flow strategy really is. Let's look at an American company. We're going to look at a company that's called Lululemon Apparel. You may have heard of them. It's a little bit like Lorna Jane, only bigger. It makes sporting apparel, yoga pants, those sorts of things. And let's say we bought our Lulu shares at $41.16. Okay, so I'll just write that clearly up here. We paid $41.16. Now, bear in mind, we've got to buy our shares in blocks of 100. And as a consequence, you'd require $4,116 to do this transaction. So we're in our share here. Now, the second part of the process is to sell our call options. And in this instance, we paid $41.16 for the shares. So if we're going to sell a call, it would need to be at a higher strike than what we paid for the shares. And in this case, we're going to pick $41.50. So if the share price moves up and we've got to sell our shares, we're selling them for a profit. Now, in the meantime, we are going to receive an income paid immediately up front and directly into our bank account of $1.46 per share. Okay? Now, that's our trade set up, and now it's fairly passive for the rest of the month. That's why it's not a not a strategy that involves a large investment of time. Now, two other things that we need to consider. Firstly, if the share price moves against us, we're going to put in our stop loss. And in this instance here, I'm going to put my stop loss at $39.70. And there's a reason for that, and I'll explain that when we get there. Now, on that basis, we've set up our trade. Now we don't need to watch it because this is a very passive strategy. And the market can really only do three things. If the share price goes up above 41.50, I'm going to be obligated to sell my shares. Now, if I sell my shares for $41.50, how much have I made? Well, I've made a capital gain of about 34 cents plus this $1.46 of income. In other words, I've made a $1.70 return on a $41 outlay. Don't worry if you're not good at maths, it's 4.4% for the month. That's a colossal return, particularly when you look at that in the context of what you can receive at the bank. That's almost 2 years' worth of bank interest in just one single month. That's if the share price moves up. What if the share price moves sideways and doesn't really do anything too exciting? Well, we get to keep our $1.46, which, by the way, is about a 3.5% return for the month. In addition, though, we get to keep our shares. So come the end of the month, when this option expires, we would be looking to do the same thing again and again and again, extracting regular cash flow, just like a rental check, from these shares. Then what happens if the share price falls? Well, provided the share price is above $39.70, we're going to keep our shares. That's our safety net, our stop losses in play. And even if we did sell our shares at $39.70, we haven't actually made a loss because we earned this $1.46 of income. This $39.70 exit here would actually be at break even. So we've had an opportunity to make money and our risk has been very, very low. And you're probably by now getting the idea of why we like this strategy. And look, sure, there's a little bit more to do in finessing this. But this session is not about teaching you to be an expert on this. It's opening the door of opportunity to this. And we love this kind of trading. I think our clients made about 3.4% on this particular trade on Lulu. We could look at other examples, things like Krispy Kreme, a stock that we trade regularly. We could look at stocks like BHP. We could look at stocks like Disney. And these are all big household names. They're good quality investments for you to be looking to put your money in. But not putting them in blindly, hoping the market's going to go up, but putting your money into these investments in a very structured way that's stacking the odds in your favor of making some dollars because you deserve it. Convention is we buy our shares in blocks of 100, we then sell an option over it, we wait for the month to go by. If the share price stays below our strike, we keep the shares, keep the income. If the share price moves up, we sell our shares for a profit and we have the income. And if the share price moves the wrong way, well, we've got our stop loss there to help protect our capital. It's pretty simple, it's pretty low risk, and we did this on both the Australian and the US markets. So in terms of putting a bit of a ribbon around this, to start to give you a little bit of a pathway that you can be following, let me share with you a couple of core points to take away. One thing to address is that, okay, you might have perhaps read something online or looked at a couple of books on how to do this, and you might be thinking to yourself, do you know something, Andrew? All very interesting, but I can do this on my own. And if you're thinking that, you're absolutely right, you can. However, something for you might want to consider. Firstly, if you want to learn how to do this on your own, you're going to invest a lot of time working out how to do it. It's probably going to take you 2 or 3 years. I've been doing this for 22 years, so I'd rate myself as knowing a bit about this. And it's often said, if you're going to do a strategy, walk in the pathway of someone that's getting the kind of results that you want. But secondly, not only is it going to take you time, but you're probably going to lose a lot of money as you try and work it out for yourself. You're never going to get your confidence back if you've taken some bark off by losing money, by not really knowing what you're doing. The key thing, though, is the time. And it's important to understand that time is far more valuable than money. Let me show you what I mean. Earlier on, when we were looking at our example of what we called the drift, and I'm just going to put some numbers on here to demonstrate just how expensive the drift can be if you find yourself sliding into that. And if you are in there right now, you would know that you're in there right now. Getting out isn't hard if someone's going to give you a hand. You've got to be open to trying something different. And it's not hard, as you'll see when I share with you exactly the methodology we use to help people really like yourself. So let's say we started out, and we'll pick a figure. Let's say that figure was 50,000. And we've had a little bit of a setback through here, and let's say we've given away 10% of that. So we're now sitting at a value on our account of 45. If we don't do anything and we just continue to drift along that path, I don't know how long you're prepared to let that drift happen, but this number is only going to go one way. Now, the alternate is to take action now and get back on course. So let's say This is our line in the sand for taking action and creating a new ending to an old story. Maybe you've tried the stock market before and it didn't work for you, and that's probably because you weren't doing a strategy like this where the odds were stacked in your favor. You were speculating. So let's say you started right here on this line here. And if we look at the returns we talked of a little earlier, we talked about AMP Capital giving us a 9.1% return on average over a 10-year period, plus the strategy I've just run through with you adds about another 7.25% a year on top of that, 16.35 all up. Let's not get down there into this. Let's just pick a round number, say 9%. Starting with 45 now, in 5 years' time, based on a 9% growth rate, you're looking at around 70,000. If you took that starting now over 10 years, same growth rate, you're looking at 106,000. If you took that over 20 years, a real horizon mindset with your investing, you're looking at 250,000. Now that seems like a very, very large number from where we are here, but that's a slow and steady, patient strategy over the long term winning the race. Bear in mind, with risk management all the way through it, our downside can be protected as well if you have a fear of the market moving against you. You're not taking outrageous chances to make that return. You're using a very, very straightforward, time-tested, proven strategy that you can be using, say, in your super or with other assets to really get things moving along. But the real painful thing about the drift is the longer you leave it to make that decision to try something new and get either back on course or really try something different, like the strategy I've just shared with you, the longer you take to make that decision. If you take 5 years to make that decision, you don't get to that number. It's about now. You see, the best time to start trading and investing was 20 years ago. The next best time is today. But it's just so easy to find reasons or, dare I say, excuses for not taking action now. Maybe it's not the right time. And I understand that totally. It's never going to be the right time. There's always going to be something. We all have things that happen in our life. You just got to plant the flag and make a decision that this kind of financial future is something that appeals to you and your family. And once you make that decision, there's no going back. Life will never be the same. You cannot unlearn what we're going to teach you. So when you learn to look at the market through the lenses I use, and I just want you to think about a life experience. I don't know if you've ever picked up the wrong pair of specs and put somebody else's glasses on, you kind of look through them and it's all foggy. When you look through the lenses that I use to look at the market, things will look very, very different. The amount of missed opportunities that you've perhaps had float past you will blow you away. It's kind of like, I don't know if you've ever had the experience where you buy a new car and you drive off the forecourt and go around the corner, the first thing you see is another car that's identical to yours. You get a bit further, there's another three. This is what we call selective perception. Those cars were always there, you just didn't see them. And as you look through the lenses that I use, and I've developed these over 22 years as a professional trader, the clarity that you will have and the opportunity that you will see will blow you away, because it doesn't matter if the market's going up, down or sideways, this is a strategy that will work for you. So in terms of getting started, all of our clients start in the same way. And over the years, we've been very robust at developing processes, because a process is kind of like a menu or recipe. If you follow a recipe, you don't need to be a chef. You can still produce a good meal. And this is just the same. It's a step-by-step process that we've developed, because after all, when the process is right, the results always follow. So let me share with you what we've developed called the escalator. And the escalator works very simply. It requires an action step. Okay? And once you've taken this action step, you will get a result. Any action, result follows. Now, you look at that result and see whether you're happy or not happy with it, and that's what we call feedback. And this becomes a loop. Now, I'll just give you an example. Let's say you know someone that's been trying to lose weight, and they've done something, they've either gone on a diet, more exercise, drunk more water, whatever it might be, and you see them and you go, wow, you look amazing, have you lost weight? How does that person feel? Well, they're probably feeling pretty happy about the feedback in the first instance, which will make them do more of the action that they did to get that result. It just becomes a looping mechanism. Trading and investing is exactly the same. So our goal for you at the start is very, very modest. In fact, our goal for our clients is, in the first instance, to learn the skills to be able to use these strategies to make an additional $100 per month. I appreciate that's not a big number, but at this point in time, this has got nothing to do with money. What it has is everything to do with your confidence. You see, a lot of people know things, but they don't have the confidence to apply that. And by adopting this strategy where seeing is believing, how many months would you need to make $100 a month before you go, this is kind of working, I'd like to make more money though? And when you get to that point, just like when you make a cake, you don't suddenly change the recipe. The only thing that really changes is the volume of ingredients, or in the case of trading, you can then start to add more dollars. In other words, you start small and then build up as your confidence grows. Now, by following the same process, our next goal is to help you learn how to make an extra $100 a week. Now, think about that, $100 a week, that may make a difference for you, it may not, but again, at this level, it's about building confidence in the process. How many weeks would you need to be earning an extra $100 before you think, yeah, I might just ratchet the goals up a touch higher? And in this instance, we're now working on our next level, which is an extra $100 a month, $1,000 per month, should I say. And at this point in time, we take this from here, is entirely up to you, but the process is exactly the same. You know, for many people, it's quite surprising to hear the process that we'll use to help you make $100 a month is exactly the process I use to manage my hedge fund, which has got millions and millions and millions of dollars in it. The process is the same. Bigger ingredients, bigger outcome. And that's what this approach is when it comes to a robust strategy. And that's why you can be so confident in this, that as your kitty or amount of trading capital grows, nothing's really changing in terms of the process, just a bigger and bigger outcome for you. And that level of certainty and confidence is very, very important. Now, in terms of how to move forward with this, you know, people come in different shapes and sizes in terms of what they want to do. So if you would like us to teach you how to do this for yourself, we can and we will. Alternatively, if you say, well, that's great, I like the strategy, but can you do it for me? Yes, we can do that too. So we work in two ways with our clients. We call it DIY, or do it yourself, or our done-for-you service. And these enable everybody, whether they want to be self-directed or guided through, to be able to get consistency and return from this. So why this strategy? Why now? Why should you be considering this? And it's very interesting. If we look at the way the world is, very specifically, as I'm talking to you today, there are three key factors that have created this opportunity, this window that's currently there for you. The first one is economically. What we've seen over time is interest rates have got progressively lower, and as a consequence, cash is simply not an investment asset. If you're thinking of saving to get in the property market, forget it. Why? Because your money is going backwards year in and year out, and the property market is moving further and further away from you. So cash is just not a viable alternative. Equally, when you look at some of the other typical investment classes, most people have seen that their speculative approach to the market has failed them since the GFC. It's been tricky. What we have here economically is a strategy that will work well even in a sideways or even in a falling market, stacking the odds significantly in your favor. So economically, there's a big thing. Then if we look at technology, we have a series of different technical developments that we've been able to bring to the market over the last 4 months, giving our clients a distinct competitive advantage in the marketplace. That window will close, but right now the odds are so unfairly stacked in your favor using this technology, you just simply need to have it. Finally is compliance and legislation. And we are regulated by ASIC. We are licensed in terms of what we do, and that's very, very important for you to understand. But what we're also now able to offer through having a registered investment scheme is the ability to have a totally done-for-you service, giving you, if you like, you don't want the labor pains, you just want the baby, we can give you the outcome without the hard work. So there is a window that's very specific, and it's very specific to right now. And the longer you take to climb through that window, the less chance there is of you ever making it to that level. I suppose if you think about it in a different way, and going back to the quote from Warren Buffett, markets are designed to take money from the impatient and donate it to the patient. And this strategy, as I've shared with you right now, is a strategy that is custom designed to target that impatient money and put it in your bank account. Something you might want to consider is that if you're going to be involved in the market, you're kind of either with us or you're against us. And if you've ever had a losing trade where you've been speculating, you can now see where the money's gone, and it will continue to go there if you're relying on guessing the direction of the market, when instead you could choose to stack the odds almost so unfairly in your favor. It makes a lot of sense to be in that team. And if you think about the fact that Buffett is the third wealthiest person on the planet, and by not just simply listening, but following his advice, I've had the opportunity to make millions of dollars personally from this kind of strategy, and I've also enabled my clients, people just like you, to make significantly higher returns on their investment. The alternative is you can be on the donating side and continue to pay people that are my clients. It's just a choice. So how do we train you up to get to grips with this? People learn in very, very different ways. Some people like live events, others like online, and some people like a compromise between the two. So to help you, we run live training events, face-to-face. They're very intimate. We keep the scale of the room down so that it can be a very personal experience rather than an overwhelming crowd. And we have dates that we run these events around the country throughout the year. That's a great starting point, and that's going to get you to a level where you're confident to squeeze the trigger and to be moving forward. But if you're really serious about turbocharging your journey and getting on this path sooner rather than later, every year we run our Trading and Investing Summit. This is an annual event. It is a profoundly impactful event. It's over 3 days, and it covers all things investing, all things trading, wrapping them up in a very, very easy to digest bundle so that you can start applying those skills immediately. Or if you want us to do the heavy lifting, think of us as the gym's lawn mowing service, if you will, of trading. We can do that too. And they are very powerful, they are live, they're face-to-face. Now, you're probably guessing by now that this is not your typical program. Too often I hear of people that have bought a course, it's on DVDs, they watch the DVDs, put hours of their time in there, they get very frustrated, they can't make it work. Yeah, they were promised the world and they were given an atlas, they get really frustrated and give it away. Put the DVDs on the shelf in the library, and I guess it's what we call the shelf improvement industry. Well, we do things very, very different. Here at AIE, the principal way that we're going to teach you, firstly, is to educate you on multiple strategies. I've talked about one in a little bit of detail tonight. We're going to teach you over 13 of them at that Trading and Investing Summit. You're going to know what to trade, and you're also going to know when to do it, but perhaps even more important is when not to. This is all wrapped up with our ongoing support, and all of our support team are professional traders. You're only going to deal with people that have got real-life, hands-on experience in the market. And at the end of the day, if you want us to do this for you, we will with our done-for-you service. So whether you want to be totally hands-off and put this on autopilot, or whether you want to learn a life skill that will help you keep on this path, then we can help you. When we look at this in more specific detail, we have online learning. Why? Well, some people like to learn online, and we do that in a variety of formats to make sure that we engage with your way of learning. It's not like sitting in a classroom at school where you get talked at for years and years. It's a very, very powerful, very engaging learning experience. Our live training events, our summit. In addition to that, we provide our clients with the tools and the technology needed to succeed in this. It doesn't happen by accident. It requires a process, but you also need some tools to assist you on the way. But the core thing for our operation is that we work on a client-for-life membership. And that's something that's very important. There's no hidden fee. There's no annual or irritating membership or subscription to pay. What it is what it is. And you will be working with advisors. You will be set up on a trajectory like this, not for the next 6 months, not for the next 6 years, but for life. So my role in all of this, when we set this operation up, going back nearly 17 years now, our goal was very, very simple. For 22 years as a professional trader, I've had the inside track, if you will, on how to make money from markets. I do that in my fund, and I do it for my clients. My role here is very simple, is to open that door of opportunity for you. And as you step through that door, the key thing for you is that we're going to be here to hold your hand every step of the way. You're not going to be on your own. You're not going to be uncomfortable. You're going to have a professional coach and a professional trader guiding you through this journey. As to how far you choose to take that journey, $100 a month, $100 a week, $1,000 a month, $1,000 a week, where do you really want to take this? Because the only thing that will decide that is you. It could, of course, be zero. And if nothing changes, well, nothing changes. We would hate for that to happen. We'd far prefer to help you by putting you through our escalator process and helping you move along this pathway to the level that you truly deserve. Think about that financial DNA. We're all born with a physiological DNA, a spiritual DNA, our work ethic DNA, charity dispositions, all of those different things. But we all have a financial DNA. And unfortunately, most people's financial DNA is fueled by mistruth. cash at the bank is safe. Well, I don't know how something that's guaranteed to lose you money year in and year out can be described as safe. Instead, it's time to look through a different set of lenses and get yourself onto a process that will help your wealth grow, to set you up for a financial future that you truly deserve. So what I want to do is very, very simple. I'm going to give you a gift. You've very patiently stayed with me through this broadcast, and I'm sure you've learned something from our time together. And I can't wait to meet you face to face and teach you the nitty-gritty, the details of how this works, or perhaps you might select me to help me manage it for you. But the next step is very, very simple. What I've shared with you is some information, but it's very general. I want to be able to give you some information that suits you and gives you a game plan. So this is what we're going to offer you. 2 professional coaching sessions with our general manager. Now, let me just pause there and give you a little of his background. This is someone that's a ADA 1 and 2 fully licensed trader with a lot of experience in the marketplace. This is someone that manages our senior trading team. He's one of the highly regarded people behind the scenes, if you like, of investment strategy development. Now, having any time with him, the meter runs. It's usually $295 for a half an hour session. But what we're going to do is give you an opportunity to have 2 complimentary sessions. They're worth over $590. I'm going to give you those as a complimentary session, but there's a reason why. He wants you to be able to get the first-hand facts of being able to make this strategy work. Rather than some flaky sales spiel where somebody's trying to sell you something, what we're going to look at doing is developing a personalized game plan that's tailored for you. You will have a set of glasses that you can look through and see in the market specifically what it is that you're aiming for, and more importantly, have a pathway laid out so that you can start on that journey and get there with confidence. So we'll also go through a strategically integrated portfolio review. That's where if you've already got a portfolio of shares, we'll take a look at them and give you some help on perhaps restructuring that, adding more of some of the good stuff, getting rid of some of the bad stuff, so that you're really starting on the right foot with the right kind of momentum. Also, as a bonus, we're going to give you a copy of our iTunes best-selling book on cash flow investing. And that's going to give you a really solid game plan. Now, all you need to do to access that is simply pop your details in the box below. Now, my general manager is a busy guy, and he does not open up the books to do this kind of thing very often. In fact, this is a unique opportunity, and it's a window that will close quickly. So make sure you claim your spot. Learn how you can tailor this strategy to suit your needs and set you up for a cash flow for life type income that's on your terms. It's as simple as popping your details in the form below, and we'll spend some time working with you on a personalized and tailored game plan to get you started. Now, when I talked about risk earlier in the presentation, I talked very specifically about the really serious risk that's there. The biggest risk of all in life is doing nothing and hoping that something changes. And right now, if you're in the financial drift, or perhaps you might be on track but not tracking the way that you want, it's far easier to get back on course now than leave it 6 months, 12 months, or 12 years to get there. Because if you do take your time to get there, the risk you need to take to get back on course could potentially finish you financially. We don't want that to happen. We want you to be on a nice, safe course where you feel comfortable, where you can use protection and risk management to help you get the outcome that you truly deserve. This is what we call create your own income. And it's there for you, and it's very, very simple to access. So make sure you pop the details in the box below, and I look forward to meeting you in the flesh at one of our live trading events. And thanks for joining us.